everyone, welcome back to your channel, The Novel Trading. I'm Urvana Kapur, your trading psychologist and performance coach. Successful trading and investment comes from mastering your mindset and psychology. So today let us look at two of the most common mistakes that traders and investors do due to their mindset and psychology, which can actually make them blow their whole account. So if you want to save your capital and not blow your account like other traders do by committing these two most common mistakes, that is FOMO trading and revenge trading, then do watch this video, as I will not only discuss about these mistakes but also provide you with some professional psychological recommendations on how to overcome such mistakes and how not to commit such mistakes. Let's go ahead and get into the psychological world of our mind. First, let us talk about FOMO trading. FOMO is an acronym for fear of missing out. This word has been trending a lot these days, so let me explain what it is from a trader's point of view. FOMO traders are too optimistic about every opportunity that come along their way. And at the same time, they're also very fearful of missing the trade and missing the profit attached to those trades. So at one end, they are very optimistic that every trade that they come across is a profitable trade. The trade can be from their own personal technical analysis or because of their friends or colleagues' suggestions, or sometimes looking at social media and seeing an influencer or an expert taking that trade. It can be from any source. So their optimism makes them believe that every trade is a profitable trade and they should take it. And because of this optimism, they get fearful of missing that opportunity because in their mind, they have already decided that it is going to be a winner. So if they don't participate in it, they lose the profit. So they are fearful and want to enter into every such opportunity. The inner thoughts that a FOMO traders have are like, this is a great opportunity and it may not come again ever again. Or they can think, I have an inner feeling that this trade is going to make me a fortune. Or they can think that everyone is taking profit from it, so I should take some too. Or it can be, I will not get a winner trade like this ever again, so I should grab all the profit from it. All this might sound silly and obvious to many, but this is something that a lot of traders are affected by. And the worst part is they're not even aware of this, as it is not a clear-cut emotion. FOMO is a mixture of emotions and it gets very difficult to detect it in real life. These are the statements that can actually tell you when you are getting triggered by this FOMO emotion. FOMO can cause you to do two things. First, take every single trade. And second, it can also force you to oversize your positioning, as in your mind, you have already decided that it is a winner. So you are ready to take that extra risk as well. Sometimes traders blow up their whole account because of this imaginary confidence on their profits. So if you are often clouded with the statements that I mentioned before, or if you have noticed yourself being too confident about some trades, not because of some technical reasons or logic behind it, but because of your emotions and thoughts and intuitions, and maybe you are risking a lot of your capital on it, or if you feel that you have an urge to jump into every trade that come across, then there are a few solutions for you to get out of this FOMO trading trap. First thing that I will recommend is rectify this thought process that this trade is a last opportunity and I will not have it again. This is not true. Trading will give you ample opportunities to make profits from, and you don't have to grab them all. Let me tell you something that will help you change this thought process of yours. Warren Buffett and Charlie Munger were once asked in a conference how they missed Google and Amazon and how they could miss out on such a big opportunity. They replied in a very humble way and they said, we miss a lot of things and we will keep doing it, but we don't miss them all. If the richest investors in the world are not able to capture every single and big opportunity, then why are you trying to do it? Accept the ones that you capture and let go of the ones that you don't. And look out for the future ones. It is that simple. Secondly, if you are doing too much FOMO trading, then seclude yourself from chat rooms, social media, news, trading discussion platforms, or anywhere from where you can get some ideas or tips of what to trade in. I'm not saying they are wrong places to be. What I am trying to say is when you are in FOMO mindset, these these places can mess up a lot with your trades. When you see other people making a lot of money from something and you are not that consistent right now, then it is natural to get influenced by them and end up following them blindly. And this might even help you make a few profits, but it can also make you blow your account because it is not something that you planned for. So for a while, stay away from these and trade alone based on your setup and your analysis, and then notice your trading. There can be two outcomes in this situation. You might start making profits. In that case, practice the same secluded trading for a few months. And once you have enough confidence on your trading, then you can get back to these platforms. Second thing that can happen in this situation is that you're still not able to make profits. Then you need to invest more time in learning proper setups and enhancing your trading knowledge. This working alone will help you save up the capital for the time when you actually learn how to trade. I hope you understood about FOMO trading and my 2 recommendations on how to control yourself from committing this mistake. I have made a complete video about FOMO trading, so if you want to dig deep into this topic, then do watch that too. It is flashing on the right corner of your screen, or you can check out the link in the description. So, moving on to the second common mistake that investors and traders do due to their faulty mindset, that is revenge trading. Revenge traders can blow up their whole account in a day or a week without even having a conscious thought about it. These traders can trigger by a single loss which they didn't expect coming. It can be from their favorite stock, or an A1 setup that they had planned, or something they have been waiting for since a long time, or something they planned after investing a lot of time and energy. Since they're not prepared for that loss, it affects their mindset and they just want to recover that loss. They forget all their rules, setup rules, their risk management rules, their position sizing rules. They just keep trading, taking multiple positions, or sometimes taking too huge and risky position sizing as well, just to prove to themselves that they can recover that loss. Psychologically, revenge trading is more of an egocentric trading, where you have to prove to yourself that you are right and capable of doing something. When you lose something in the market that you were not prepared for, it hits your ego that how can I be wrong? And you take actions to prove to yourself and sometimes to others that you have it in you and you can do it. This ego ends up pressuring you so much that you end up forgetting all your rules and start trading like a maniac, putting everything at stake just to satisfy your ego. Sometimes this works as well, as they are taking multiple trades and they end up recovering their losses. Sometimes this works as well, fortunately, or for me it's unfortunately, and they are able to recover their losses, and this positive reinforcements make this their habit, and they try doing this every single time such a situation occurs. But this is the market. That is the most unpredictable place. And one single trade, if not managed well, can blow up your whole account. And this is what can happen if you practice this revenge trading. Remember, in rule-based trading, it'll take multiple trades to build up your capital. It is a slow and a gradual process. But if done right, it is always consistent. But one single trade without following your rules can actually not only blow up your account, but also make you lose the confidence in that setup. And in the worst case, you may lose confidence in yourself too as a trader. So with all this explanation, I'm sure you must have recognized if you are revenge trading or not. So here are a few recommendations. Firstly, notice the trades that trigger you to take revenge from the market. I am discussing 2 major situations and solutions to it. First situation can be when you are taking trades with too big position sizing. That is, you're risking the capital you can't afford to lose. And once you lose it, it hits you hard. In this situation, take trades with smaller position sizing, as this will allow you to accept the loss even if you get one. And you will not feel that upset about it. Because the position sizing is small, the loss will also be small, and you'll not feel that upset about it. And this will make you take further decisions on logic and not your emotions. Another situation can be where you attach too much to a single trade. It can be due to a lot of reasons. It can be a trade on your favorite stock or a pair, or maybe your favorite setup. In life, when we attach to something, we feel hurt to lose it. And we end up taking irrational decisions because of that hurtful feeling. So make sure you have no favorites in this market. Don't get attached to anything. Treat every trade equally. And always remember, even if it is the most lucrative trade or a setup, it still has a possibility of losing. Keep this in the mind before entering any trade. Second recommendation is to focus on the long term. I know it is easier said than done, but when you start practicing the recommendations I mentioned before, it is important for you to look at the bigger picture. Try focusing on how the long-term success is important than trying to recover that loss from the market right now in this very moment. Don't force yourself to be right every day. This is not what happens here. Stop expecting that much from yourself or from any setup. Make long-term goals for yourself, like weekly returns or monthly returns or yearly returns, and focus on them instead of taking revenge from the market for that single trade or sometimes a streak of trades as well. Work on your long-term trading skills instead of being egoistic about it and sticking to one single trade and losing all your capital because of it. So these are the two most common mistakes that traders do. I hope you have understood them by now. Make sure you follow the recommendations that I mentioned in this video before you step on that one single wrong trade, which I called as trade mines, which can vanish your capital and in worst case, even you from this market. Trading is a profession of numbers. So trade on numbers and not the emotions and the thoughts that cloud your logical decisions. Be aware of these mistakes and prepare yourself of not stepping on these trade mines by focusing on the numbers and not your emotions. I hope you like this video. Do press the like button and also subscribe to our channel for more such videos. Please mention your feedback regarding this video in the comment box. Also, if you have any questions or facing any psychological issues while trading, do comment below or WhatsApp me on the given number. I personally take trading psychology sessions with traders to help them understand their psychological shortcomings in trading and to make them more profitable and successful traders. To book a demo session, please WhatsApp at 9999494844. I hope this video was beneficial to you. To know more about trading psychology and the mindset of successful traders, do subscribe to this channel and hit the bell icon for latest updates of our upcoming videos. Thank you everyone and happy trading.